It's Q&A Friday on the show. That means time to have some fun and give way to the money questions you've sent our way. I'm Edric Mendoza and this is On the Money. Joining us to answer your money questions is registered financial planner Marvin Germo and of course, Melissa Heculeo and Salve Duplito. Hello, ladies.
Hello.
Fun Friday.
Hello.
And be Christmas
time, Marvin.
Yes.
Thanks for having
Warm
me.
colors for Christmas.
Hi, Marvin.
It's an honor to be here again.
Yay.
Yeah.
Great.
Let's get started.
We start off with some stock market questions.
Sure.
So the first one comes from Edward, who says, I want to invest in the stock market because of the potential returns, but my friends tell me prices are expensive now and I should wait for a major correction. Most analysts, however, expect the market to continue its uptrend next year. Will it be better then to buy now in case stock prices go up even more?
Drum roll, please.
Okay, that's a very interesting question.
Right.
One thing I liked about the question was that the friend was recommending that the stocks now are a bit expensive. When you say expensive, it's a relative term.
There you go.
What's expensive to one
good to
investor is different from another analyst. So what he should look there for when he's investing is that the companies, the stocks represent earnings. Okay, so they should look for companies now that still have bigger potential of earning in the future. So regardless of how high it has gone up over the past few months, over the past 3 years, if earnings come up, it can't help but just go up even higher. So earnings, companies that have a lot of earnings, a lot of potential, a lot of projects that are going on over the next few months will still go up in price regardless of if it has gone up 30-50% over the past 2 years.
So
Talking like a value investor.
Then.
Yeah.
Yes.
It's a combination of everything that you look at the intrinsic value of it. If it's undervalued, you look at the income of the company. If it's still there, if it's still in a growth industry, if it's still something where the government is pumping money into it, because where the government puts money, if they build more bridges, of course who's going to benefit from that? Construction companies, cement companies. That's where I want to put my money in.
I see.
This is why when you would like to invest in the stock market, you have to know about what's happening out there. You have to know which companies has a future, and you can't just do this because you want a return for today or the next day, right?
Yeah.
This has to be something long term.
Yeah, no, I always tell my clients, don't look at the earnings first. Study the companies. Because if you study and have a trading plan and you know what to do, regardless if people are telling you to sell or to buy, you'll stick to your own decision. And when you have the confidence to do it, when you have the confidence to stick it out there when everyone else wants to sell, because you know that company's going to go up, it will be the biggest money maker for you. Because a lot of people, a lot of people have been making money now, but there's a bigger chunk of people who made a lot of money during the recession.
So he shouldn't necessarily wait for a correction then?
I guess he could split his money. A certain set of his portfolio can be placed in companies where there's still a lot of growth, but he should still reserve a certain portion for cash. Should there be a correction, he can buy some companies that have gone up already severely over the past few months.
Right.
Okay.
So get in, but only for a little, with just a smaller amount of money, and then wait for you to buy some more, if it goes down. So you have a little bit of a strategy there. You don't go in blindly.
Don't go
just
in
because
blindly.
somebody says. So you have a strategy, and you're saying, you can buy some now, and then wait, if you want to buy some more
That's
eventually.
where diversification comes in. Even in the stock market, you can still subdivide it. So for example, you'd like to put it now on all big conglomerates, all holding companies, and then if a correction comes in, you can put it in banks, retail sectors. For example, banks are the most battered when there's a recession. So when stuff like that comes in, and you have cash, you have an extra position to buy it at a cheaper price.
That's right.
Okay. Now Gavin asks, I attended a Stock Market 101 seminar and one of the speakers mentioned the need to know when to cut losses. Is there a rule of thumb in determining when to do so? Is the cut loss method only applicable for day traders or even for those who plan to hold their stocks for 6 months to 1 year? Good question.
Another awesome question.
Yeah, exactly.
Cutting losses, for me, it's not for everyone. Because when you cut your losses, one thing you should realize is you actually materialize your losses already.
You feel the loss.
You feel the loss, and you actually lose. When you hold it, it's still on paper. It can bounce back. You get back your capital and still probably earn more. So here's the thing: when people would like to cut their losses, number one, I always tell them that you should have a strategy for it. Because the saddest thing, and this is also from personal experience, so the saddest thing that could happen to you when you cut your losses, the next day it would bounce back up.
Yeah.
And that can happen. And that can happen. And the agony of you, oh no, I don't want to buy the stock anymore because of that happening. So the only reason why you would want to buy, you would want to cut your stocks is if the stocks would severely go down and you want to buy it at a lower price. So for example, a stock would go down to 10 and based on your analysis, you think it would fall to 8 or 7. Cut your losses and then buy back at 7. That's one thing. Another way to cut your losses is when the stock that you want is continually going down and all of the other stocks are moving higher, you cut your losses on a stock that's being battered and then put it into a stock that's going higher. But the answer there is you need to have a plan, because some people, they just cut and do nothing.
And you need to know which is going up and down. I mean, that's a key skill, obviously, right?
Right.
The lesser time you put into studying, better just hold it.
When you put a strategy there, just like you say, you kind of remove your emotions from what's going on in the market. Because I know a lot of people who bought a certain stock and then they were just so afraid it was going down. They got married. You know, you get married with your stock. And what that means is even if it's going down, you don't want to let go of it. It's from now till forever, right? And so what happened after 10 years, the stock is worthless. No, really, after 10 to 15 years, the stock is worthless. And your money's gone. So it can be used for a long-term strategy.
Yeah. So this holding for 6 to 1 year, he should actually plan to hold it for 6 months to 1 year.
Two strategies that he can employ there. Number one is if he knows how to use technical analysis, by studying the graphs, he'll be able to check reversals in the trend. When he spots a reversal, that a stock that's going up and suddenly would reverse for it going down, when he sees that, he can sell without any emotion, regardless if it's the bluest of blue stock. That's number one. For some fund managers or some traders, is they set up a percentage. For example, a stock would drop to 4%. Regardless of what happens, they sell.
There you go.
So there's no rule of thumb. What percentage they want, it's up to them. What can they afford to lose?
What can you afford to lose? What you're comfortable with?
I'd rather hand it to somebody and let them deal with it for me. I don't want to have those feelings attached to my money. Okay. Now, James Michael asks, when and why does rotational buying happen? Is there already a cycle that determines when a particular sector will be favored and when it will be dumped?
Okay, another good question.
Maybe you can also define those terms there.
Rotational buying.
What's amazing about that is it doesn't happen all the time, but there are particular seasons and cycles in the market where some stocks in a particular industry, all of them, they fly at the same time. All right. So, for example, now what we're seeing now in our market is all of the mining stocks are being battered. But we have to know that the stock market is driven by news. It's driven by sentiment. It's driven by what people feel, what's happening in the particular industry. So, for example, with mining, what happened? There was an executive order that is not yet resolved now. So, a lot of people, a lot of investors are a bit hesitant in putting their money in mining. So, instead of them putting their money in that particular industry, why not? I just put it in banking. I just put it in consumer industries where it's moving up. So when that happens, people start selling, it would go down even lower. And they shift their money into stocks.
So that's rotational buying?
Yes, yes.
It's a herd mentality.
It moves.
It's moving.
Literally,
it's moving. Like, for example, now, elections are coming up. People are already positioning themselves in companies, TV stations that are listed in the stock market. So as they're listed in the stock market, as more commercials come in during election period, earnings would come into that company.
Right.
That's great.
That makes sense.
Great.
Okay.
So, is there a cycle, it says here, is there a cycle that determines which one will be favored? You're saying depends on the industry itself.
Depends on the industry, but for me, I don't look at cycles in particular. I look at the company itself.
Makes
I look
sense.
at where the money is going. Because if the company is earning, for example, if more banks are earning due to trading gains, due to the loans that they give out, more people are borrowing, I look at that first. The cycle, the mental psychology comes later on. At the end of the day, it's still companies. It's earnings that drives income. It drives the stock price to go up.
You also have to understand that there are boom-bust cycles that are inherent in certain sectors. And if you're into stock investing, you have to understand these boom-bust cycles so that you know your strategy. For example, the property sector normally has a 10-year boom-bust cycle that goes with the stock market
Gracie asks, when does one use market orders like GTC, good till canceled, or GTW, good till week?
Yeah. You maybe want to explain that
Yeah,
also.
actually, I don't
Those
know what
terms.
those mean,
Okay,
so I'm curious about that.
GTC and GTW, it works for people who are busy. What happens there? For example, you'd like to buy a certain stock. You'd like to buy ABS-CBN stock, say at 35 pesos. Say, I'd like to buy ABS at 35. Good till cancelled means you post the order at 35. Unless that order gets posted or unless that order gets matched, for the next week, that order will still be there. So you don't have to actively watch that and post it every day.
Because normally, if you don't have that order, things will expire at the end of the trading day.
So
you
you're
don't
buying
have to
the
watch
stock
it.
every day while it's at 35? Is that what's
Until
happening?
it's
No.
can't.
If you
It's
want
until
to
it
buy
changes.
it, if you want to
Cancel.
buy it at 35,
Right.
Yep.
Okay, and then there's a matching order. You can get it within the day. What if it doesn't? So if I'm busy and I don't want to watch the market, I tell my broker it's good till week or
I
good till
see.
canceled. And then if tomorrow the matching order comes in, the
Then you're
broker
done.
can
Yeah. Any transaction
Okay.
you're done.
Yeah.
Because not all orders that you post get matched each day.
Yes.
Correct.
So if you don't want to go to the hassle of
Checking and
it
checking
every
and
day,
checking.
just put it in a good till cancelled. That's what I do. Sometimes when I'm so busy, most tip for the listeners, I make my analysis in the evening, and if I can't really execute the order and watch it the whole week, I just do that. Because I
see.
already have a price where I
So
want to buy it.
If it hits this level within this period, buy.
Buy.
Go
That's
ahead,
it.
yeah. And you don't
After
have
this
to
period,
repeat
it's
it.
cancelled. That's why it's
Yep,
good
yep,
till.
yep.
Makes
Marvin,
sense.
it works
to
for
know
both
that,
buying
Marvin.
and
I never
selling.
knew that.
Yep.
Yeah.
Yeah. And good till week?
Week 7 days meaning.
I see.
Yeah.
So you give a specific date,
Yeah,
or
yeah.
you just do.
So for example, you post it on a Monday, count 7 days. That's when it will be cancelled. So you have to post again unless it doesn't get hit.
Clear.
Okay, well, you learn something new every day.
Yeah. More of your money questions after this break. Stay tuned. On the Money, we'll be right back. Welcome back to On the Money. Still with us to answer your money questions is registered financial planner Marvin Germo and of course Melissa Hecolea and Salve Duplito. Round 2.
It's like Hermo, Hecolea,
Yeah.
Duplito. What are with our last names?
Power team.
This comes from Maricar. She says, I've been job hunting for almost a year now. I've received some offers, but they're for jobs overseas. I know of people who will grab the opportunity right away, but I want to keep that as my last resort. I've read about optimism over the local economy. How is that relevant to regular Pinoys like me? Parang malalaking kumpanya lang ang nakikinabang sa sinasabi nilang magandang ekonomiya.
That's a good question. Really?
That's a good question.
But it is a good
Yes,
question.
yes, it is.
Okay.
Yes, it
You
is.
did well. You did well.
And actually,
Very good.
Marvin, before you answer
Okay.
that, I want to add to that question. Is this okay?
Yeah.
That there's a lot of talk of about what's happening to the economy right now, right? So I'm just making you feel better. Okay, so how can Filipinos like Maricar
Okay.
position themselves
Okay.
in such a
Take
way that
advantage.
they can take advantage of
Good
what's
question.
happening?
Yeah.
Okay, so I'll put it into what we were talking about a while ago
Sure.
within stocks and all of the other
That's
investment
right.
vehicles. So,
Yeah, everything's moving together,
number one, we're now one of the highest gaining stock markets across the globe.
Relative to the size, no? Yeah.
Number
in
two,
the world.
Yeah.
our GDP
Yes.
7.1%.
One of
is
the highest.
One of the highest economies throughout Asia.
Incredible.
So how does it fit into everyone? First of all, when we see these numbers, it will attract more investors to come in. It attracts retail investors. It attracts foreign investors to invest in our country. How does that help everyone else? So when they see more liquidity in our markets, more people pumping money into it, more IPOs would come out, more shares would be sold, more bond offerings would come in. What does that mean? When more money are given through IPOs, it means more projects for businesses, more expansions, more buildings are meant to be built. What happens next?
More
More jobs are
opportunity,
created.
yes.
More
Exactly.
opportunities are going to be fueling up for other Filipinos
Right.
that don't have jobs. Other
Right.
people can get promoted. So
Right.
it's exciting times.
Right.
It's an exciting time to be a Filipino right now because I've never seen this time where the whole world is centering on us.
Yeah.
That, wow, we're not just going to be popular for a boxing icon now, but our economy is a place where people can put a singer.
Yes,
Yeah.
that's right.
Now, Marvin, what does this mean at the kitchen table? Let's
Okay.
translate this to household
Exactly.
So this
level,
particular
you know?
person,
How does
okay.
this affect our
These are big
lives?
discussions,
Okay.
but
Yeah.
how
Okay.
does it translate?
So she's looking for a job overseas, for example, right? Yeah.
I don't really. I think it's something that's.
She's not feeling it right now.
Yeah.
She's
Yeah,
not
that's
yet
right.
feeling it.
Because it's not something that's immediate. It's something that affects everyone over a long
Top
period of
down,
time.
no?
Because for example, investors come in, they build new hospitals, they build new bridges. It would take also a certain time for it to be built.
Maricar, there's a lag time.
Yeah, she
You will
can't
have to
expect
wait
to
for
get
the lag
something
time.
right away.
But in the meantime, do not be lax about this. This is the time for you to suck it in the middle a little bit more, save more money, so you can invest and ride what's happening in the economy. You know, sometimes when people say, you know, the market is moving well, and any monkey can make money in a good market, right, Marvin? Yeah? Any monkey can make money, but not any monkey who has the cash can make money, but not the people below who don't save and invest.
Sure.
Right.
The economy will move forward and the ones at the bottom will stay down.
Yeah.
Okay.
So just be careful about what you
Sure.
do with your money.
Now, Christy asks, an office mate is suggesting that we pool our money to invest in a mutual fund. Is this okay? Your guests always mention the need to know one's risk profile before investing. I'm sure all of us, 8 people, if we all agree to the proposal, have varying risk appetites. If ever, how do we reconcile this? That's an interesting question and proposition by
It's
her
almost,
author.
I think it's a no-brainer. It's just go on your own.
Yeah, that's
Exactly.
right.
And
Yeah,
the
exactly.
entry
Marvin, I don't know
levels
what you
are
think.
very low.
Yeah.
It makes sense for that to happen if the entry level is high.
Yep,
And
yep.
you need
Yeah.
to pull your money together to reach that.
Especially knowing
But
that they
at
all have different risk
5,000,
profiles, right? I mean,
exactly.
I want to put it in equities. This person want to put it in a balanced fund.
Yeah.
Just
Yeah.
put your
Marvin,
own
what
money
do
in
you
your own
think?
mutual
For
fund.
me,
I
it's
know, exactly. Go ahead, Marvin.
It's very risky.
Yeah.
You want to know why?
Why
Yeah.
do that or why?
You're
Because,
going
for
to have
example,
to
you're-
divide up the piece of the pie.
Not just that, you're 8 people, and then it's named after one
One.
person.
Ah,
What if
right.
this guy
That's very
Runs
this
away
guy
with
runs
your
away,
money.
Exactly.
draws it?
That's
But
right.
if they're all
None of us even thought.
if they're
So
all
Christy, not another scam, right?
Yeah.
This could be.
Who's
be
this
careful.
friend of yours?
Yeah.
Who is this friend
Be
of yours
careful.
who wants
Stay
to do this?
away.
And do they want it under their name?
Just go on your own.
And one more thing about that, with the purest intentions, even if they're all good friends, right? No one steals the money. This person whose fund it's named after him, he dies.
Okay.
All the money goes to his estate,
They're a
not to all of them.
beneficiary.
Right.
Exactly.
Let's just play devil's advocate. Any benefits from doing this? Coming together and putting pooled money together in
I don't
any
see
instrument.
any.
For a mutual fund,
Let's say even not mutual. Any instrument. Does it even make sense for 8 people to come together and pool their money?
I don't
Maybe
normally
if it's a
recommend it for
business.
an
Apart from that,
If it's an investment in a business, I think that makes sense.
but things
Yeah,
like
but
instruments,
this
financial
type of
instruments.
thing.
Yeah, because if it's a
Not-
business,
not
you're
for
covered by the
mutual fund.
corporation's shares there. But for a mutual fund that's named under one person,
so
I
no.
don't normally recommend
Okay,
it. Yeah.
Don't
so,
advise,
so
okay.
just take your 5 or 10,000 pesos and invest it in your own mutual fund. Jerry asks, I'm 27 years old and I've been working as a freelance photographer for 3 years now. Since I'm still relatively new in wedding photography, the rates I charge are pretty competitive. Downside of the job, I'm never sure how many clients I will book in a month. That means I can't have regular working budget. So as I want to upgrade the equipment I use, I can't do so at a whim, even if having the latest stuff can help my work. What money tips can you give me?
This is
Good. It's a good
Yes,
question.
I think it's
it
a
is.
Very
business call, actually.
practical.
Yeah.
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 And for me, that's where budgeting comes in. First of all, he has a business and he also needs to take care of his personal needs where there are also expenses coming. So he needs to make 2 budgets. One is the operating expenses for his business and the other one is for his personal expenses. So he'll be able to list that down. When he gets the amount that he needs, he'll already have like a break-even point per month. So what does that do? At least he needs to know how much he needs to get per month to be able to get by.
Sure.
And then after getting that, I always go back to the emergency fund. One for personal needs and then one for business. He fills that up first. Once he fills up the emergency fund for personal and business needs, that's when he starts buying new equipment.
Right, right.
Good.
Don't buy the equipment at this time. He cannot afford it.
Right.
First, come up with a good size emergency fund.
Sure.
And by then, you can start saving money to buy the
Right.
equipment. I think
That's
he'll
great
do fine
advice.
with an old camera.
Yeah, if he's skilled,
Yeah.
he should do well.
It's not in the equipment; it's in the eyes.
Exactly.
For discussion purposes, would it make sense for him? I mean, it could be a business call, right? He has a projection. He's not sure of when the money will come in, but
Okay.
over a year, he has an amount that he thinks he can make.
Okay.
Is it wise for him to actually pull a loan to now invest in good capital one time, so he can now become even more competitive, and then therefore hit all his goals and pay off the loan in a year, for example? Would
What
that make
if
sense?
the problem with that is that it's risky? Wedding
Right.
photographers now, there's so many of them.
Yes.
And
Yes.
The industry is very competitive.
Yes.
And what if something happens to him and he has this loan to pay for? He has an accident or he gets sick. So that's a little bit risky at this time.
So he has to
I don't
weigh
know if
that,
you-
no?
Now, Lou asks, we live in New Zealand and we have 4 kids. My husband's boss's 5-bedroom house is for sale. He is offering it to us without a deposit. The mortgage is 25% higher than the amount of rent we are paying at the moment. Should we buy it if ever we plan to use all of our savings, including that of our kids? Wow, how badly do they need this house?
Right.
What do you think, Marvin?
That's a
It's
good
a big
question.
deal.
That's actually a
They
good question.
think-
Yeah, I
How
know.
bad do they
I
need it?
really
Yeah.
wonder
Right.
how
It's a
badly
good
do
deal.
they
For me,
need
it's
it.
something they're putting themselves at a very risky position.
Yes.
Putting all your savings, putting all your kids' savings just to get the house. If it were me, I'd get a house that's a bit cheaper, where I don't have to dump all my savings just to be able to acquire something.
And
Or
the
stay
mortgage
first.
is higher than their rent.
The rent.
Yeah.
But
so
it's
how are they going to do
And
this?
put all their savings. Does it make sense for them to actually stay in the rental process until a better deal comes up?
Yep, until
Diba?
they get something that's cheaper.
Because they're able. It seems like they're okay with the rental.
Yeah.
It's just-
Yeah,
Buying a house
exactly.
really is an emotional purchase. And sometimes, Filipinos especially, we love living in our own
In New
home.
Zealand.
And you're in New Zealand, you have
wow.
a garden, etc. But do not be emotional about that
Yeah.
purchase.
Yeah,
be
I'm sure
tempting.
the house is beautiful, but maybe look for something that you can really afford right now without dipping into your savings and your children's savings, right?
Marvin, you agree? Yeah.
Yep. The only time we could go out and pay out loans is that everything has been set, meaning emergency funds are in place, health insurances are there, life insurance are there, because we don't know what's going to happen in the future.
Right.
So what we can only do is prepare. So at this point, I don't think that they're as prepared as they can be to put out a loan. So what's going to happen if something happens, wala silang savings, possibly the loan they might not
might
be able to pay.
foreclose.
Yeah,
Right.
they might default on it.
Send us your money questions via email or through Facebook and Twitter, and we'll try to answer them in our upcoming episodes or on our next Q&A Friday.
Great discussions, guys. Marvin, thanks again for being here.
Thank you so much.
That's our show today. I'm Edric Mendoza. Join us again next week for more talk and tips so you're always right on the money. Happy weekend.